Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are going to be talking about currency. Now, the question is why we are talking about currency? Because of late, last year, Indian rupee has been a savior. It has been trading in a very, very narrow range, courtesy of RBI. And what it actually really did, it gave a lot of confidence again to the foreign investors because when you don't have a currency volatility, you actually are in a much, much, much better position of taking decisions from the perspective of investments. And we actually have really seen that it has helped a lot from the perspective of foreign investors and also importers and exporters. Now the question is, we are in 2024 calendar year. It's January, and we actually have, and this is also a year which is going to be significant from the perspective that maybe we are going to see rate cuts from the Fed, and that perhaps could have some impact on the US dollar, and that could also have impact from the perspective of strengthening of Indian rupee. We have of late seen some strengthening of Indian rupee versus dollar versus other currencies. So now the question is, uh, what actually could be the trend for rupee? What are actually some important events or triggers which we should remember for rupee? And remember, if actually rupee appreciates, that's actually good both from the perspective of paying less for crude, paying less for gold, but then also it implies currency gain for foreign investors. So it becomes a double trigger for the foreign investors also from equity inflows also, and it becomes good for stock markets also. So now for understanding that, let me now welcome an industry expert, a guest who is no stranger to our show. And whenever it comes to currency, we actually go to him. So let me now welcome Mr. M. Srinivasan, the Vice President of McRoy Financials. So welcome to the show. Sir, let me start first on the Indian rupee. What do you make out of the recent strength? Is that something which was long overdue, or is it something which is largely a function of global markets? How are you looking at that?
This is a combination of both the local markets as well as the what you said, long overdue. Since the beginning of this August, the rupee has been trading in a very narrow range between 83, 82.70 and 83.40 at the extreme ends, but largely within the 30 paisa range. We as consultants, we have been in touch with a lot of exporters and importers. Most of them have not been taking hedge because the forward premiums have been very low as far as the dollar rupee is concerned. So there was no incentive for the exporters to do any hedging. And rupee has also been, it was like people are thinking whether it will break 83.40 and go higher, and whether there will be more opportunities for us to take a better rate. These kind of doubts are there in the minds of the exporters. So it has been holding this level for quite some time. Recently, if you see the global scenario, uh, people are coming out to the scenario where US may start cutting interest rates from the month of March. The market is predicting a 70% chance of a rate cut in the month of March. And thereon, some people are predicting three rate cuts, and some people are predicting even six rate cuts also in the coming year from the Fed. So that's giving a kind of a negative outlook on the US dollar. So this is one another aspect that is improving the risk appetite for the uh, investors. And coming to the rupee, now we have seen some kind of ECB related inflows and a surge in foreign investors coming into the domestic equity markets. In addition to that, we had the news about including our bonds into the JP Morgan bond index, and there was a news from Bloomberg that Bloomberg bond index might be thinking about including our bonds
Yes,
into their portfolio.
emerging
This will
index.
also another source of forex inflows. All these things have gone into the minds of the exporters, and recently some inflows were there that added to the recent strength in the rupee. This is explaining very in a nutshell.
Right, and also January, like that part of the year where actually a lot of allocations get decided by the foreign investors. You start seeing basically action. If again those are net positive allocations, and we indeed actually are seeing some inflows here. But having sort of looked at that, Mr. Srinivasan, what do you make out of the current account deficit numbers? Is that also something which is sort of leading to some sort of point that perhaps this is January, budget is going to come, but if it's all looking good for the 3 quarters till now, perhaps towards the March we are going to end up with good, better numbers. And is that something also which is playing up sort of for investors or like for the currency market players?
Definitely, the current account deficit, in the first and second quarter, we were worried that the current account deficit may be higher because of crude oil prices. Then afterwards, crude oil prices have started coming down. As a result of that, now the current account deficit is forecast to be around 1% of the GDP, which is actually a very good number as far as the Reserve Bank is concerned. So that is one positive news for the Indian rupee. Apart from that, the political scenario, it looks like the present government may continue and the reforms may continue. This is another positive news for the foreign investors. In addition to that, what I had mentioned, this bond index, inclusion in the bond index, that actually gives the more inflows into the market, possibly starting from the month of March and thereon. And second, the government also can borrow from the market at a lower rates. So this is another positive thing. And one more thing is that the government has planned to reduce the fiscal deficit from the next year onwards towards 4% level. So that is another positive news. All this positive news are aiding the rupee, but there is only one X factor that we have to worry: how long the RBI will continue to intervene in the market, which nobody can really make a guess out of that. So
But I'm
my
curious. I want to ask you this point. You have seen multiple cycles, right? These 5 year election cycles. You have seen multiple cycles. So I'm curious, and I want to actually give some insights to the viewers from a currency market perspective. Usually, from stock market, we get more excited because that is on your face. Those are like slightly bigger movements, and you're able to actually say that okay, this election result perhaps might be coming. So markets perhaps might be reacting this way. Currency markets are slightly much higher in depth, and also basically from that perspective, it is also a call on the economy. So from your own experience over the last 4 or 5 election cycles, as we reach closer to the sort of that euphoria or rhetoric around the voting and elections, is it something which actually really moves the needle on currency?
No, you can't call that we are in a euphoria kind of scenario. Uh, Now the market is in a doubtful mode. I mean, in the sense that whether the Fed will cut interest rates in the month of March itself, because there is no very clear comments from the Fed
No, no, sir.
official.
I'm asking from an election point of view. So suppose if April, May are the elections, seasonally or historically, a month before, is there any sort of volatility which comes into the currency markets, or it's almost a no event for the currency market?
It is a no event as far as now it is concerned. Unless something like a 2004 scenario pans out. Uh, Suddenly, there is a big surprise that whatever poll forecasters are saying, that the present ruling government will get a 330 seats or they will form a majority government. This kind of scenario, the same scenario was forecast in 2004, and completely everything was different, where we got the Manmohan Singh government coming with the support of communists. But at the moment, analyzing for even for a layman, analyzing the current scenario, we don't see that kind of a situation happening again. That is what foreign investors are thinking. Unless you see something totally surprising that could derail all the calculations, I don't see a major correction happening. All this euphoria, I mean, kind of thing that is happening in the stock market and money coming in, all these things are based on real fundamentals, not just euphoria. Of course, there is a
True.
premium attached. Yeah, yeah.
True, absolutely true. So that perhaps
Mm.
is one factor which we should be watching out for, and very important. It's more about the economics, so you should know even again from the perspective of elections.
Yeah.
But coming to another parts here, and that would be what we in the March quarter. What do you expect of the budget from the perspective of currency?
See, normally in the kind of in when elections are coming, it will be a vote on account. It will not be a full budget. So we don't expect anything sensational announcements. But except that, whatever I'm going through in the newspapers, uh, is that sorry, is that there will be more allocation for capex. This is what finance minister has been saying. No other big bang announcement will be made during this budget. Only when the next government forms and there will be a full budget when sometime in the month of June or July, a full budget will be presented, then we can take a stand. Even
Um,
then, even then, it will be a continuation of the current policies only. Nothing. I don't think they will totally go deviate from the current scenario.
Sure, sir. And now let's talk about strategy. What is the sort of word or view in terms of strategy on the dollar rupee pair?
Dollar rupee, from our side, we have been saying whenever the rupee has been nearing that 83.25, 83.30 levels, we have been advising the clients to do the hedging for exports and the receivables. And for imports, it is actually individual basis we are advising. Currently around 80 to 90, because the premiums are so low, you can even afford to hedge up to 2 months payables. So that way we have been advising the clients, and it is going on well at the moment.
Also a sort of similar view on euro rupee, like how that pair is performing.
Euro rupee is difficult to predict, assuming that dollar rupee remains stable around 83 level. I think 1.11, about 1.1112 on the euro will be a good sell. Something like 92 and above will be a good sell. And as far as I believe that euro doesn't have much potential to go higher because of the complexities in the European economy. Germany is in recession, and Europe is also expected to go into recession. But still, the European policymakers are still not giving a clear signal whether they will be able to cut rates immediately. Because inflation, they would like to bring it to that sustainable basis to 2% level. So even just about 2 days back, the Bundesbank president and Bank of France president, both of them have been discouraging rate cuts immediately. But market is expecting sometime in the month of April or May a cut
Hmm.
coming from European Central Bank. It is not really like how they are predicting for the Fed, not with
Right.
much of conviction. So that being the case, euro will probably for the next foreseeable 3 to 4 weeks, probably 6 weeks, will be moving around this level, around 90, between 90 and 92 levels. And after that, we will see a new direction, probably on the, to
Okay.
the lower side. Yeah.
Sure. So that's the word on the strategy on the currency, and perhaps we talked about a couple of events. Looks like what is going to be a spotlight is what US Fed is going to do, what comes out in the budget, but that perhaps is going to be a sort of indicator towards the macro and will cast a shadow on the bonds and the currency eventually. So perhaps I think over the next 2 3 weeks, I think that should be something exciting, and we'll again connect with Mr. Srinivasan to take further insights on the currency trajectory. But for now, as always, sir, pleasure talking to you, getting your insights on the currency markets,
One more
and sure,
point I want to make about this bond
please go
index.
ahead.
If you look into the CCIL data,
Hmm.
uh, the CCIL data says only 4,30,000 crores uh, limit is available for the FIs, that
Hmm.
comes to approximately $51 billion. But if you put both this JP Morgan as well as Bloomberg index both put together, it's coming to just $64 billion. We don't know whether the government will increase the limit, because as of March 2020, only 32 scripts have been opened for FII investment.
Right.
If whether they will increase or not, we don't know. If they increase it, then there is more scope for more money to come in.
Absolutely, and I think perhaps for that, I think because now government knows that in June, one global entity is including Indian bonds into its index, and there's another second
Definitely.
entity which is opening up. So maybe I think what you're indicating perhaps could come in the budget, where the government actually could open the path for that. So that should be
Yes.
something I think which we should watch out for. Very important, interesting point here. I think we'll watch out for that. But with that, Mr. Srinivasan, thanks a lot for coming on our show and giving us insights and also strategy on the currencies. And we'll again connect you post budget to take further insights on the currency markets.
Thank you very much.
And dear viewers, hope you enjoyed this currency show and were able to spot your strategy on the rupee. For now, it's a wrap on the show.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.